Hi, this is Rob with Federal Finance CPE. We are going to answer a question that those new to federal accounting and finance have, which is, what is Federal GAAP, or Generally Accepted Accounting Principles? The real question is, what is the purpose of Federal GAAP? When most accountants hear the phrase GAAP, they think about financial statements for companies. They think about income statement, balance sheet, and statement of cash flows. Those statements are designed primarily for investors and creditors, people who want to understand profitability, financial position, and financial performance. But federal financial reporting exists for a different reason. The users of federal financial statements are not shareholders. They are citizens, Congress, and government leaders. And those users are asking different questions. They want to know how taxpayer funds are being used. They want to know what resources the federal government controls. And they want to know whether federal programs are being managed responsibly. Because the users are different, the purpose of the financial statements are different. And when the purpose changes, the accounting framework also needs to change. That framework is what we call Federal GAAP. Today I want to answer a simple but important question. What is the purpose of Federal GAAP? To answer that question, we need to understand three things. First, why federal financial reporting is different from commercial accounting. Second, how the federal government created accounting standards for itself. And third, what is Federal GAAP made of? Once you understand that structure, the federal financial reporting system becomes much easier to navigate. Why federal accounting is different. The federal government performs activities that private companies rarely perform. Because of that, federal financial reporting must deal with accounting questions that corporate accounting never had to address. One example of this is something we call seigniorage. Seigniorage refers to the process of turning raw materials into currency. Think about what happens when the U.S. Mint produces coins, such as the penny, RIP penny. The Mint purchases metal, copper, nickel, zinc. Those materials are manufactured into coins, and those coins are then issued into circulation as U.S. currency. Now here is where the accounting questions appear. The metal used to produce the coin might cost only a few cents, but the coin may enter circulation at a face value of up to $1. So the government has effectively transformed raw materials into a financial instrument with a higher value. That raises an accounting question. How should we treat the difference reported? Is it revenue? Is it profit? Is it financing? These are not typical questions in corporate accounting, but they are very real questions in federal reporting. Situations like this are one reason that the federal government needed accounting standards specifically designed for federal operations. Those standards eventually became what we call now Federal GAAP. By the late 1980s, Congress became increasingly concerned about financial management across the federal government. The government controlled enormous resources, but there was limited government-wide reporting. Different agencies used different accounting practices, and it was difficult to understand the federal government's overall financial position. In response, Congress passed a major financial management reform law, the Chief Financial Officers Act of 1990. One of the most important provisions of the CFO Act mandated and required major federal agencies to begin producing audited financial statements. That was a significant change. For the first time, large parts of the federal government would produce financial statements that would be subject to independent audit. But that requirement immediately created a problem. Auditors ask a simple question. If we're going to audit these financial statements, what accounting standards are they supposed to follow? At the time, there was no singular authoritative answer. That gap created the need for a federal accounting standard setter. To address this issue, the federal government created the Federal Accounting Standards Advisory Board, commonly known as FASAB. FASAB was established to develop accounting standards specifically for the federal government by a memorandum. The board operates under sponsorship of three organizations: the Department of the Treasury, the Office of Management and Budget, and the Government Accountability Office. These organizations oversee the development of federal accounting standards. FASAB develops standards through public process. Proposed standards are issued for public comment, Feedback is gathered from agencies, auditors, academics, and other stakeholders, like you, the citizens. After this process, financial standards are approved by the sponsoring principals. In 1999, the American Institute of Certified Public Accountants, or AICPA, formally recognized FASAB as a designated accounting standards setter for the federal government. At this point, the standards issued by FASAB became recognized as Federal GAAP. So what counts as Federal GAAP? Federal GAAP is not just one document. Instead, it is a structured body of accounting guidance. Like other accounting frameworks, Federal GAAP follows a hierarchy of authority. This hierarchy helps accountants and auditors determine which guidance takes priority when interpreting accounting rules. At the top of the hierarchy are statements of federal financial accounting standards, commonly called SFFAS, and interpretations. Below that are technical bulletins, which address more specific accounting issues. Then there are technical releases. And finally, there are implementation guidance, which help agencies apply standards in practice. This hierarchy is formally defined in SFAS 34. Now let's briefly walk through each level of the hierarchy. Federal GAAP standards. The top of the Federal GAAP hierarchy are the Statements of Federal Financial Accounting Standards, or SFFAS. These are the primary accounting standards issued by FASAB. They define how federal entities measure and report assets, liabilities, costs, and financing sources. For example, here we have SFFAS 56, Classified Activities. These standards form the core of the federal financial reporting model. Below the standards are the interpretations. Interpretations are issued when additional clarification is needed about how an existing standard should be applied. They do not create entirely new accounting standards. Instead, they help resolve questions that arise when agencies and auditors apply the existing standard and guidance. Interpretations help ensure that federal accounting standards are applied consistently across the government. For our example, you see interpretation number 8, interpretation of Statement of Federal Financial Accounting Standards 56, Classified Activities. Further down the hierarchy are technical bulletins. Technical bulletins address more specific accounting issues that agencies encounter in practice. In our example, we are showing a technical bulletin 2024 TAC 1 Seized Forfeited Digital Assets, which provided additional guidance for applying federal accounting standards to seized and forfeited digital assets. Then we move to technical releases. Our example is Federal Financial Accounting Auditing Technical Release 4, reporting on non-valued seized and forfeited property. As you see, these technical releases go into very specific issues that are encountered by some federal agencies. And finally, there are implementation guidance. Implementation guidance helps agencies apply accounting standards in real-world financial reporting systems. Here we have Staff Implementation Guidance 23.1, guidance for implementation of SFFAS 23, eliminating the category National Defense Property, Plant and Equipment, classification of items formerly considered National Defense PP&E. Together, these different levels of guidance form the complete framework of Federal GAAP. How federal standards become financial statements. At this point, you know where federal accounting standards come from. They come from FASAB. But there is another practical question. How do these standards actually turn into financial statements? That process works through two key pieces of documentation. The first is a U.S. Standard General Ledger, commonly known as USSGL, which is a TFM supplement. The USSGL provides a standardized chart of accounts used across the federal government. Every federal agency records transactions using these standardized accounts. This helps ensure that accounting data is recorded consistently across agencies. The second piece is OMB Circular A-136. OMB Circular A-136 provides the instructions for preparing federal financial statements. It defines which financial statements must be presented, how they should be structured, and how accounting data should be mapped to those statements. So the process works like this. FASAB issues accounting standards. Those standards are implemented through USSGL accounts and accounting entries, and the financial reporting format is defined by OMB A-136. For example, when an agency records property and equipment under SFAS 6, those balances are recorded using USSGL accounts. Those balances ultimately appear on the balance sheet prepared under A-136. This structure also supports auditability and transparency. Because agencies use standardized accounts, and reporting formats, auditors can evaluate whether financial statements are prepared in accordance with Federal GAAP. Putting it all together, let's take a step back and look at the entire system together. In 1990, Congress passed the Chief Financial Officers Act. One of the goals was that the law was to improve financial management across the federal government and require major agencies to produce audited financial statements. In order to do that, the federal government needed a complete financial reporting framework. Accounting standards are issued by FASAB, and these standards are implemented through the U.S. Standard General Ledger. And financial statements are prepared using reporting structure defined by A-136. Federal agencies use the framework to produce their annual financial statements, and those agency financial statements are ultimately combined and consolidated to produce the financial report of the U.S. government. This entire system exists for one purpose: provide transparency and accountability for how federal government manages public resources, because the users of federal financial statements are not shareholders. They are citizens, Congress, and government leaders responsible for overseeing the use of taxpayer funds. So the next time you open a federal agency's financial statements and see something like the statement of net costs or statement of budgetary resources, you will know that those reports are part of a much larger system designed to ensure accountability across the entire federal government. And that entire framework is what we call Federal GAAP. You just saw how Federal GAAP connects USSGL and financial statements. If you want to see how that actually works at an account level, start with the one free CPE on Treasury account symbols we offer. Link in the description. And thank you for viewing.